Hey, what's up, guys? It is Wednesday, November 13th, 9 o'clock at Central Standard Time. November 13th, 2024. Let's take a look at the market here. Let's see what's going on and why I'm not ready to short. Got a couple things going on here. Let's start with SPY. There's a few tools that are helpful that I have on my charts that I kind of flip on and off. First one would be, if we haven't talked about, this is a free tool you can get on tradingview.com. Ripster EMA Clouds. I just leave it as it's set. He seems to have it figured out. As you can see here, it's pretty good for swings and long-term investors. You've got your short-term EMAs. Typically that's going to be support when you get into that. The bigger bounces are going to be off of the 50 to 72, 80, 90, whatever. And basically you want to trade, you want to follow the red and the green. Obviously for your trades, this blue, when it flips bearish, you got to go way back, will turn yellow, and you'll know that we're in a actual bear market. So let's look at this in the big term. We are in a bull market still for 2024. The question will be, is this sustainable to end 2024? Using the same tool here, we see that as the market was going, as long as it's above these major, now this is 3 month, so it's quarterly charts, right? So each one of these is a quarter. Let's go ahead and take this and move it down to the 4-quarter average. And okay, it's pink so we can see it. Something interesting you should know: starting in 2008, the Federal Reserve lowered interest rates to 0, and then every time we closed a quarter below the 4-quarter moving average, the Federal Reserve would step in and buy stocks, right? Buy securities. As you can see, they started here. Well, they started down here. They stopped the crash, which you could argue was really just a, what do I say? False breakout. The failed breakout is always stronger than the initial breakout, right? Whoa, how do you know? Let's take a look at this one here. What do you know? The failure was stronger than the initial breakout there. That was awesome. All right, we'll come to this. We'll come back to this, I promise. But let's just look at simply, we're not talking about the crash, the end of the world yet. We'll get there. Let's take a look at this from a long-term analysis. Right now we are above the 4-quarter moving average strongly. We are very strongly above the 9 to the 20 EMAs. So that's safe. It's safe to go long. Why wouldn't it be safe to stay long? There's a couple things. Let's take this line here, move this over here. So this was the quarterly quarterly top in 2022. January 2022 marked the top. They obviously broke above that, and they have yet to come back and test this on the quarterly. Now you say, well, you know what? We never did really test this one either, right? We never really did test this one either, right? We just kept chugging along, right? So that's not really concern for calling the top yet. Excuse me. But I will say, on shorter time frames, it is time for a retracement. And when everybody is buying the stock market, and when Trump is winning and everything is going up and everything is great, That's because the banks are selling to retail. When your friends are asking you what stocks to buy, you know the top is in. When people are asking how to buy Dogecoin, how do I buy Dogecoin? You know the top is in, right? DOGE, Department of Government Efficiency, Elon Musk. When everybody is saying, should I buy Tesla? You need to be thinking, I don't think that's going to work. I don't think that's going to last. I think we're going to get a push higher and then sweep these highs and then a retracement down. What am I saying? What am I saying, Mark? This is going to 600, right? Could be. But what we're doing today is we are looking for a retracement of a sort. So everybody says I'm a perma bear, so let's be one. I want to go down to a 1 minute chart of the NASDAQ. And I have my account pulled up here down to the 1 minute chart of the NASDAQ. We're going to do this quickly because this is important to you, and then I will talk about my long-term idea, which is not as important to you. I want to show you one thing, how to call tops. How to call tops and bottoms. And not necessarily just tops and bottoms, but when you know a breakout's going to fail. So let's look at this 1 minute chart here. And let's take this thing off. We don't need the purple line. Now I had this support area drawn here earlier, which is holding in after hours, but let's make this not visible for the moment. And let's just look at one thing. How do you know a market's going to reverse and change directions? How is this going to flip from red to green, from yellow to blue, right? How do you know? Well, this right here is likely going to break and come down here. But let's do this. Let's try this real quick. No, let's not. Let's just look. Okay. So let's use this moving average, the Ripster EMA clouds. When it gets extended from it, it comes back into it, right? It bounces off of that. It gets extended. It comes back into it, right? How do you know it's going to break this and continue higher? Because likely they will have, I'm going to call this an exhaustion move, where the buyer is done buying. They're waiting for it to pull back, and then they'll buy some more. And then they're waiting for it to pull back, and they'll buy some more. And when they can't break this high, it starts to reverse. Then the shorts, the people who went short up here, are now trapped, and they're going to get squeezed out. And the target, I keep moving this pin, but let's do this. Let's just do one for fun. Targets right here, 2, 1, 1, 10, 25. Let's see how we do. When we get this exhaustion move on large volume and we see a pullback, right? And then this part is where it's important. This is where it fails. And what happens likely is you will have this push away that's a large candle, and then you'll have another candle, a large candle, push into it. And it creates what some people say is an inversion fair value gap. But it's basically this idea of a U-turn. A U-turn, right? So you want to look for this U-turn. So let's say down here, oops, I didn't mean to do that. Don't know what that is. So let's see down here. They had an exhaustion move. They pulled back into the moving averages. They had another push down, and it just wasn't sustainable to break that low. And so what happened? It turned around and got above here. Now what's happening right here? We pushed and pushed, got an exhaustion move, came back to the moving average, had a big push, a U-turn, and then a break, right? You think it's going to hold? I don't know, I might bounce there. There's a lot of gaps in here to fill. Let's see. This is what I'm looking for a reversal. A lot of people think when this pulls back, they think, oh my gosh, we had an exhaustion move, and now it's bad. Well, look at this. In this scenario, what happened? A failed breakout is always stronger than the initial breakout. We're going to come down here and we will finally break this. Anyway, what I'm talking about is this candle right here. This move up, and then this candle, and a U-turn. And if I could draw it, it would look like climactic, and then a pullback, go above, and then start to curve and make a U-turn, right? And then it goes to push again, and it can't get above that, and that's where the short is, right there, right? And you guys have been around long enough, you've heard me talk about the shoe. That's what this is. This is a quick move down, like the heel of a boot. Comes back up, starts to go around, and then makes the real move. That's the boot. That's what I call the boot. But all it is a failure to continue. And all the people that went short here early expecting this to be broken are now trapped when this candle hits. When this exhaustion move says that seller that pushed it all the way to here is not in this trade anymore, then what happens? They get shorted, or they get squeezed, and it gets pushed the other way, right? This might or might not work. I just thought it was fun to watch. I just wanted to see if it would work. Let's put let's zoom out and see where our target is here. So let's take the same trade. We had a exhaustion move and then a curl, and then it started to go up, right? So this might actually not work. Might not work. We have the heel of the boot, curve back up, come back down, tag people in short, unable to break lower, and so what happens? It goes higher, right? I think I'm going to exit this trade. That's not a good trade on the 15-minute time frame. So, short term, let's look at this. SPY. Let's go back to SPY daily. Do we have a U-turn yet? No. No. We had our first exhaustion move away from this moving average cloud, right? We had that, but we did not have another attempt to break that in failure. So here's what we're going to be looking for. A pull down in here to fake people out, maybe tomorrow. Another move higher, and that's when the retracement happens, right? We have, what was this, election night? We never did come back and test this. Never did come back and test this candle here. So, am I bearish? Not yet. Not yet. I think this is holding. I think we're going to have another push higher. We have one exhaustion move away from the moving average. We're pulling back into the moving average, and the more we pull into this moving average without trying to go higher, the more likely we'll get another bounce even higher, right? So let's keep that in mind. We're looking for a failure of a bounce is what we're looking for. We want to bounce and then for it to fail. Now, when it does fail, I've talked about for a couple weeks now, 555, right? We broke out of here. We tried to retest it. We never got below it. We never did trap any shorts. And you could say we trapped some shorts on that day for sure. And I don't know what I was thinking trying to short AMD. But for the record, AMD is lower than where we tried to short it. Just saying. 136.08 tomorrow probably. We'll take a look at that one. Anyway, that's besides the point. Never wrong, just early, right? Because that totally makes you rich. So, we have still to retest. We have still to retest. And then down here is where the shorts would actually be trapped. Here's the key. Here's the key. If they don't bounce at 555, then we can start talking about, like, if we get another bounce up here without sweeping these lows, if we get a bounce right here and come up, we are going to be looking for a longer short, right? But here's what I want to see. I want to see this move down, fake out, come back down, retest that, bounce, fake out, come back down, hit that baby, and then that's going to be the actual move into December. Okay, leave that on my chart for a second so you can see that. That's what I want to see. I want to see the shorts calling the end of the world get trapped right here for the next leg higher, because this is not a sustainable move to go much higher. Now, does that mean we're going to be short a whole lot of stuff right now? Not yet, because like I said, if they have 5 or 6 days of consolidation moving down into these moving averages, or if we come straight back down in there and break this, then we'll get a bounce, right? So we can't be overly bearish yet. We gotta wait for that. Let's see if we can find another one here on the NASDAQ. What's happening here? They had an exhaustion move. Let's go to the 3-minute chart. They had an exhaustion move away from, watch this come down to fill this gap right here. They had an exhaustion move away from the moving average. They came into it, another rip higher, and then that buyer could not, was the buyer that bought this, sorry for the craziness on my mouse, but the buyer that bought this is not there anymore. He didn't break this high, so he's not there. So there's nobody else to carry the market. So what's going to happen? It's going to push lower, right? It's going to push lower. It's going to fill this. Maybe I'll even sweep these lows. I knew I shouldn't have been in this trade. I just said that, didn't I? This is the move that we're looking for on SPY. We want the push. We want to come back into the moving average. We want another big push. And then we'll get our failure. Right? If anybody's interested in futures, there is quite the movement towards futures trading right now. And there is a lot to learn. They came up short of this gap. So what are they going to do next time? They're going to break it. See how that works? Where's their next bounce area? If they can hold this gap, this fair value gap right here. They're not going to come to this because they came up short of that. So they're going to come all the way down into here. And if they slice through this, then they'll go to my little number there. We'll see what happens. I don't want to be in this trade if we engulf that candle. That's on a 3-minute chart. It might come back into this area or retest it. Looks like that 3-minute might be holding. And if so, what does that do? That traps shorts so that they can break over this moving average, right? That's why we use stop losses. All right, so I kind of just want to see if this works here. Come right down here and bounce. I don't know. Yeah, let's move on. All right, so now that's over. So SPY, we want to see it come up one more time before we try to short it. If they continue to consolidate, I will be bullish for another move higher without retesting this, right? So they have a couple gaps to fill. They're going to be these are going to be targets, and they also might be areas to sweep. So they're people are shorting when they break this low, and then they're going to get down and trap them and then shoot it back higher. I'm not really interested in being short much yet. Even AMD, honestly, this is a little extended, so it can come down to 136 and then get caught in a squeeze, right? AMD looks a little bit like Chewy did before it bounced. See how you have this pivot with all these gaps, right? And then they come down into it, and then if anybody took this one, man, that's so irritating, isn't it? See how we had these gaps down here? They came down into it for a few days, and then that was the propulsion higher. Remember? Man, that's irritating. So let's look at some long ideas. AI looks like it could go a little bit higher. Let's do some. Not only is it in this moving average here, but we had the see how this kind of did it already. This might not be a good idea. It got away from the moving averages, pulled back, bounced, got too extended, and came back. So really getting underneath this green candle is probably not going to work, and it's going to come back down. But it hit our number 2914 and broke above it. So next idea would be to break above this high, 31.75, and higher. So I'm watching AI. I think I like that stock. Let's look at some other ones real quick. DKNG, and I also have PIN to go with it. Let's see it pull down another day and see what it does. Let's wait on that one. PIN is another gaming stock. See, I'm looking at 25 on this one. It's already broken out, so we really are kind of missed the boat on that one. Let's skip that one. BYD. All these need to come down a little bit. We might just be sitting on our hands for a while and just see how the market reacts. FFIV is too high. FIVE I know is down, but they've got earnings coming up. But I kind of like this one long. So let's delete that. So see how this one broke out here and came back. Now again, this was a failure to launch, right? So they had to come back and retest some support. Now they've come under that, and that's definitely support. It bounced hard there, bounced hard there. So I'm kind of looking for FIVE to go higher. And I think they might have enough shorts trapped here to get going and move higher on that one. This one I really like on the weekly. Looks like there's some room to push all the way up to this 110 area. See how it never really did retest this. So I'd like to see this push up to this 111 area. So keep FIVE on your list long. Man, Sedge really let me down today. But I want to show you on a 1 minute chart what happened. So we put in all-time lows today, and then they got below all-time lows, and the shorts were finally like, all right, we're going to give it up. We're going to start getting out. And they just monster ripped it to the end of the day, right? Obviously we're still red on this one, but I kind of like this one for a few days. I like to see them sweep this all-time low, and then that looks like a nice ending move to push higher. See how they got extended from the moving average, came back to retest it, got extended again, and so now they might have one more day down here and before the rip higher. But I really like how extended this is, and I really like how short it is. It's short like 30%. So if we can get one more push down to like this 1150 area, and then a rip up to 16, a rip higher even up there. I like SEDG. What else do we got here? Is there anything else worth looking at? Let's look at LUNR. It's already taken off without us. Dang it. I made this list on Sunday, and I never did make a video. You guys want to be sick to your stomach. Look at Dave. Remember this one I was talking about 3 or 4 weeks ago? That makes you sick to your stomach. Absolutely. When it was 38 bucks and now it's 90. Oh my gosh. So let's look at GME. What's GameStonk doing? Curling up pretty nice. See where the liquidity is up here at 34, 35 area. I would not be shocked to see 35 by the end of the week. Keep GameStop on your list long. You want to see something that'll really make you sick? Remember last month when I said, oh look, MSTR has a small move from 118 to 150. We should take that. We should take this trade. Look what it did. It worked. And oh my goodness. That's nuts. Man, I'm missed. Look at Bitcoin. What's Bitcoin doing tonight? 90,000. Remember my projection from down here? This candle right here, and I said it's going to go from there to there. Took too long. But it hit. Never wrong, just early. Tesla. Tesla's got an opportunity for us to go long again on this one. See how it got extended from the moving average? Just pulling back, and it's going to go again. And with this one, I kind of think there's potential to make another leg higher on this one. Let's zoom out and see where our levels are now. So remember when I said it's going to go from 180 to 300, 180, 300, 180, 300, and then look at that. Look at that candle. Man, I got to spend some more time finding more of these, and we just got to buy leaps. We got to. I want to find some leaps here. Let's find some leap puts on the biggest stock in the world. Video's done. Let's see where we can short this puppy. We gotta wait. We gotta wait a long time. Where is the move? Where is the move? It's just still right here to here. It's from right here to right here. From right here to right here. We gotta wait a long time. We gotta wait a long time for that one. But we'll be ready for it. Alright. That ends our watch list for this week. Oh, ASTS. ASTS was a very nice little trade this morning. We've been just waiting for this this channel to give up and retest the other side. It did that. It hit my number. It's kind of off the board. If we open above this number, let's see where the next buyer would be from. The next buyer is from right here where we closed. Ooh, look at that. Right here where we closed this candle. See that? Do you guys see that? Right there to there. Let's move this over. Wait a minute. It's not there. It's to this candle. See that? Right there to there. Oh, guys. ASTS. That's a good one. Right there to that candle. Right where we are today. Right there. I'll find the exact number tonight, but it's going to be about 36.50. Guys, ASTS tomorrow. ASTS GME FIV kind of looks nice. I think that's all I got long. So now let's take a break from that. I will post my long trade ideas there at this video. Let's take a look at this here. I want to show you long term what's going to happen. And this is very long term. But this is for anybody that's interested in investing. I have no long-term investments right now. All right. We talked about S&P 500. I'm using SPX. SP 500 broke out of here. It never did retest. It never came down. It never trapped shorts for the next leg higher. We had news, so it could push higher. But if anything, that's just an exhaustion move, again, for a failed breakout. And we at minimum now, let me turn on my magnet tool. At minimum, we're going to sweep this, come back into this, right? That's at bare minimum. Earnings, or not earnings, options expiration is next week. Curious to see if that will do it. Pull it back all the way to 5,500. Let's see. So what happens if we get down there? Let's look at the quarterly chart again. How far up are we on the year? Does anybody know? SP500 year to date return. This is unheard of. This is absolutely unheard of. When has the SP500 turned more than 30%? I don't know. That's something to research. But anyway, the average return is 10.6% over the last 100 years. So to have a 30% return in 1 year is a little unheard of, right? We still haven't retested this area, 4800. We haven't done that. Now let's talk about how everything always eventually gets retested. And let me delete everything off my chart. So we're just looking at the market. Okay, clearly we're in a unsustainable bullish market here compared to the rest of the history of the S&P 500. It's absolutely nuts. So let's go down to the monthly chart. Now let's get back into, let's imagine this is a 1 minute chart for a minute here. What we want to do is we want to see if fair value has been offered in all places of the market, or are there places that are what they call unfair value, which means they haven't been back tested, right? So for example, this move here, also this candle here is one-sided, right? Only buyers, right? These are only buyers. There's no red, there's no equivalent back, whereas this is like buyers and then sellers, right? This is a fair value area where there's an opportunity for buyers and sellers both. Oh, I'll take that off. There's an opportunity for buyers and sellers both to be in the market, and the price is balanced, right? Now what is support and resistance? Support and resistance is just areas of balance. Let's move down here for an example. Here's COVID crash. Now I'll put my magnet back on. COVID crashed, came down, made an equal retracement higher, broke out, came back, made an equal fair value area to close this area. So there's an equal number of sellers, equal number of buyers. Man, that stupid thing. Equal number of sellers, equal number of buyers. What happened here? Equal number of buyers and equal number of sellers. Now, from here, you can move on. And where is your support going to be? When they come back to this area, this is balanced. This is an equal value area, a fair valued area. So what happens when they come back into this area? This is balanced. That means there's no reason to come back into this. So they bounce. So now where's the fair value area? It'd be from here to here. There is no reason for them to pull back into this area now. There are an equal number of buyers and an equal number of sellers. It is balanced. Let's take it over here. There are an equal number of sellers and an equal number of buyers, right? So what's likely going to happen? At some point, they're going to have to come back down here. Now here's what's interesting. So these are fair value areas. Where is a fair value gap? This area is fair value. And as you can see, there are an equal number of buyers, equal number of sellers, equal number of buyers again to push it out. And what happened when they got back into that area? That was the buy area for them to push higher, right? But what happened? They left a fair value gap. An area with not only does it have a physical gap, but this is an area where there are 0 sellers. That means this is a magnet. This right here is going to be a magnet, and it has to close. It has to close at some point. It might not immediately, but it has to close. So we're going to put a big rectangle from here to here and say this is our target. This is where the market wants to go. And we will make it like bright yellow or something. I don't know. I don't know how to make this thing work. Let's make it bright yellow. Bright yellow. This is a fair value gap. So that's all fair value. Everything from the COVID dip down is fair value, right? Let's look and see where the COVID dip went to. This area is considered fair value. There are an equal number of buyers. You didn't know I was going to go this deep, did you? There are an equal number of buyers and an equal number of sellers. That is fair value, right? What is this area right here? There are equal number of buyers and sellers. So where is there not an equal number of buyers and sellers? Above this. See, it went up and never came back and retested. Where was the bottom of the COVID crash? Can you make this up? Can you make this any more whatever? Can you make this up? So, now, I mean, how many years was that? 2016 to 2020, that was a presidency, right? Maybe it resets every presidency. I don't know. But I know this area is fair value. This area is all fair value. And the only place that is not on this entire chart from 2016 to today, the only place from 2014 to today that is not fair value is 4800 SPX. Just saying. Call me crazy. Flash crash. End of the year. 4800. Good night. Y'all have a good night. If you're interested in this stuff, let me know. Thanks.